Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Monday, October 22nd. Nice little down day we had on Friday. Follow through from Thursday's Google debacle. And I did mention on Friday, I said, guys, we've been coming out with some real bad earnings. A lot of bellwethers not reporting or not beating earnings and guiding much lower, stating economic conditions. And I did mention all you need is one big bellwether and really put reality back in check here. And as I mentioned before, Apple number one, Google number two, holdings in hedge funds and mutual funds. So that's a scary sight when you have everybody on one side. So we're going to see what happens with Apple. Apple breaking down from a clear head and shoulders pattern formation. I do have some fib numbers and I have some numbers that I want to bring out to you guys. I know a lot of people follow Apple, and had a bunch of questions and a lot of emails asking me about where do you think Apple goes, and I just did a little quick technical here, and I wanted to show you. Weakness here in the technology sector has been really noticeable. I've been mentioning that for the last couple of weeks, and I did put out the XLF, the bank sector, and I'm like, wow, look at this. The banks are doing pretty well. So you have clear rotation coming out of technology, going into the banks. For what reason, I personally not looking to play. That's just a terrible sector for me anyway. I'm not never really liked it. Too much manipulation from the Fed, and we have utilities doing really well. So if you look at the board here, this is what we did. It really didn't come out at the end of the week. All in all, the numbers really don't look too bad if you really look at it. If you take away from obviously Friday. Because Thursday, really nothing much happened, but Friday really was a down day, and you basically were selling rallies. That's really what happened, and I'll show that into the charts as well. Look down at the sectors, and you can see, the semis continue to get whopped. Internet down 2.5%. Transports actually closed up, and look at utilities, 1.74%. So that's really showing you that money going into the safe havens, even bonds too as well. Silver took it on the chin as well as gold. Look down below. Crude oil as well, 1.1% down. And then all of the commodities, copper, 1.5%. Palladium, natural gas, gasoline, and heating oil. So not a pretty picture on Friday. Now, and that's really, again, coming on weakness coming in coming in out of earnings. Now, this week, speaking of earnings, is going to be the biggest week in earnings reporting. So they've been obviously selling the news on earnings, and even if you did well, they still took profits, and if you did poorly, boy, you really got punished for it by missing your earnings and guiding lower. So I have a funny feeling that if the market doesn't take back at least 38-50% of Friday's move quite quickly, I think we can have some continued weakness. And usually this is the weakest week recorded in history for history repeating itself. And then at the end of the October, beginning of November, we start slowly getting back, and people start buying dips, and then we get a nice rally into the new year, which is what I'm really hoping for, a nice little pullback. So one day does not make a trend. On the very short term, we are in a small downtrend, but we are extremely oversold in the 60-minute and 30-minute charts. So if we do come into a bounce, we'll see if that bounce gets sold into. So we're going to monitor it closely. But a lot of good trades to be had on Friday. If you're just not looking to pick a bottom, there's a lot of guys out there that, market's down, 0.75%. Spiders are down here, and, XYZ's down here. I'm going to look to try to buy them. It's not how it works. Look to stick to the trend. If you're buying a stock, it's in an uptrend, you want to be buying pullbacks. If you're selling weakness, you want to be selling rallies into resistance. And that's really that's going to keep you out of trouble, bottom line. And, of course, position sizing and managing your risk accordingly to your account. Okay, so we got some good news. We had some decent news coming out economically. But from an economic perspective, we do have a fairly light week. We're going to hear from the FOMC again. And he's probably going to obviously keep rates unchanged. Thursday and Friday, we're going to have that's going to be the big batch of numbers, and of course, initial jobless claims and third quarter GDP will come out Friday morning. Michigan sentiment as well, and I'll get that all to you. You can see that in the morning call. So let's go right into what I like to do now is just kind of roll right into the charts and just kind of show you where we are. And let's take a look at the sectors here. You can see conglomerates, basic materials. did quite well. Look at technology that really got wild. And again, that's basically has a lot to do with Apple. And our indices here, you could see Dow Jones mid cap did the best, and then gold got really hit hard. Oil, dollar actually had a little bit of a rebound, and Russell 2000 down. So, but this is a weekly perspective, so we want to really keep an eye on really what happens this week, because it was really a one-day thing, and that was really on Friday. Okay, on that options expiration itself. Okay, well, let's get into the NYMO, the McClellan oscillator, and as you can see here, we've actually topped here, and we're making lower lows now. There's plenty of room here, so just to show you where we are, we've been chopping around negative 30, plus 30, but we've been there's plenty of room to run to the downside, so we're not oversold on a daily perspective, but yes, on a shorter term time frame, we are oversold. And let's take a look at what the VIX is doing here. As you can see, we've been chopping around in this big area, big candle, and now we're right at this top of this candle. So usually you don't get these really big breakouts when you get a large candle. You usually kind of fall back in, and maybe 16.5 is a spot, and then it breaks this downtrend. When it does break this longer term downtrend here, then I think you have something with the VIX to really take notice. I'm really watching it closely, but not really as closely as I was back a year or 2 years ago. S&P above the 50-day moving average, still way above 58%. So guys, we got plenty of room here to move to the downside. Stocks really starting to break down. We're above 58%, so there's plenty of room left. Now let's talk about the dollar. Right? Everybody's looking at the dollar. Where are we? Well, we're in this sideways consolidation channel, right? We're not breaking down, we're not breaking up, but we did have 2 nice follow-through days, and we're above the 20 line in stochastic. So keep an eye on that. And if you look at our ratio chart here, now that ratio chart, if I draw a downtrend line, I'm right at that line here, right? Which I'll do that tomorrow for you guys. But if you look at this ratio, if we break out of that line, and that dollar breaks out, that's going to really damper and hinder any kind of rally, because the dollar's going to gain some momentum, and then markets are actually going to really start to sell off, which I don't have a problem with, because I'm really looking to get long going into the fourth quarter here, last couple of months of the fourth quarter. Now, we do have a death cross here, right? 50, 200-day death cross, right? So that's something to watch. Sometimes they break them, and then they run right back up again. So let's keep an eye on the dollar. It's going to be really a good telltale sign of what happens. All right, so let's go into the charts here. We have the FXE, which is the ETF for the euro, and I did mention, I said, guys, just totally unsustainable, and it really is. And what I've been seeing is just, I like looking at sentiment, right, and what you have here in trends of just normal pundits and what they talk about. When the market is going good, that's all they talk about. And all of a sudden, everybody's now calling for a market top, or we're going to crash. So that also scares me as well. Yes, I'd like to see the market roll down, come in a little bit, actually much further, maybe another 3-4%, 2%, 2 to 4%, let's call it. But when you have everybody starting to call that it's a market top, and it's totally useless when you have just one big one down day. And believe it or not, that day on Friday was totally orderly. It wasn't even anything scary. So, it just keep an eye on that, okay? Yeah, it's just a word of caution. Don't listen to the pundits. Look at what the charts are saying, and then really make a decision based on that. But nonetheless, we have dropped the fib line from here to here. And as you can see here, we're just right in between, just underneath that 23 and 38%. That 200-day comes in, and then we got trend line support down below. So my guess, maybe a bounce here, and then a lower high, and then a euro goes lower and right back into here, which would put a spike, obviously, in the dollar. Okay, let's take a look here at the S&P 500 cash. I have this nice trend line. Again, I put some Fibonacci retracements. Look at the volume profiles. So if you look at the volume studies here in a daily chart, a break of here will give us very little thin area, a thin zone. So 38% will come into that 1395. Call it 1400. But if we do break this 14 and a quarter, you'll see 1400 pretty quickly, and that'll break that uptrend line. Now, usually when you break a longer term uptrend line, you do bounce and you do get some sort of a flag pattern. Let's just call it something like this, here, and then maybe like a lower high, and then fail again. So, like an ABC type pattern, and then back down here. So this is something that what I'll be looking for, make some sort of a lower high, maybe make another flag, and then break lower, and then catch that 200-day as it comes back up, as you see the 200 is rising. More MACD stochastics, you see, start trying to curl up here, but if you really look closely, it's really curling down. Let me see if I can get that up here a little bit for you. But if you can see, you see how it started hooking. It's looking really hooking down. So we're going to keep an eye on it. Again, one day doesn't make a trend, but really keep a close eye at what's happening here with price action. And it was orderly. I'd like to see if the bulls are really going to be in control here. We're going to have to take back at least 50% of this candle, 38 to 50%. Now spiders, because I like looking at volume. Look at the volume here on the spiders. Clearly distribution days, Thursday and Friday. You can't even compare. Thursday, Friday, major distribution days, and we had that doji, and it's large engulfing. So this really is not a good sign here. Again, even if it bounced back up to the 20, and then I'd see sellers look to come in, or even if it bounced up in this area here, this is all lower high, lower high, lower high. And if I take this trend line from here and just kind of drag that all the way here, and you look at this, and you can even see this as a descending triangle. So something that we're going to be watching. Really interested to see what happens tomorrow. 30-minute spiders. Now, remember, thin zone. So a break at is 143, 143. We're going to get into this area here is all thin zone. So we can easily, quickly start at the upper end of this area here, 141 to 140 and a half. Let's call it 140. So you got $1.50 of support in here, and then if that breaks, then all hell's going to break loose, because you can see here we have nothing going down to at least the 135 area. So watch the spiders carefully, guys. That's going to give you a good sign of what's happening. If risk is off, they're going to be selling stock. Now, TLT, bonds, back above. And I mentioned on Friday morning, I said, look what happens. Usually they try to take them back to the 200, and sure enough, close back above the 200-day bullish. Now, our indicators are still ugly looking, so that does it's a one-hit wonder basically. It's only one day. Again, same thing with equity. So we really need some confirmation. A couple of down days, maybe an up day on weak volume, and then they sell them again. Then you're going to clearly have distribution here. Next, diamonds, same thing. We just kind of really hit that 50-day moving average in that long-term uptrend. I put a Fibonacci retracement for you guys. We have a 38%, which actually coincides nicely with our volume profile. So if you can see here, right up in that 130 to 128 area. And then, of course, you got that rising 200-day moving average. So keep an eye on the Dow as well. I'm not a really big looker of the Dow itself, but, I do like to look and see what happens. Everybody talks about it. XLF, very well. Price action holding up real nicely here. Again, money coming out of tech. Looks like it's going into the banks. But even the banks, at one point in time, they will be taking profits if the market does get ugly. So one day, again, guys, does not make a trend. I don't want everybody to get scared. It's just, for the longer term guys. If you are, right now, like I said, puts are really cheap. So if you want to spend a little money just for some insurance, why not? If you don't want to go, if you do want to hold through, a bullish catalyst going into the end of the year. IWMs, risk off. Nice head and shoulders pattern here. Measured move is right here. Okay, and actually coincides nicely with this uptrend line. So 200-day right up in this area. So $78, $79, call it, would be a good spot for this head and shoulders pattern for this measured move. And look at this distribution next 2 days. So clearly selling coming in. IYT really just back here, held this low trend line again. So we'll see what happens if we get some follow through. Really not much to talk about on here. SMH, just ugly looking chart, guys. Ugly looking chart. Holding this area here. Break below this is going to really get you down below here in this 2950 area. Now let's take a look at Apple. All right, Apple. Head, left shoulder, right shoulder, working nicely. Here's my target for Apple. 599.76. Call it 600 for a round lot. There's no reason why that Apple can't touch 600 even by Monday. By tomorrow, you were talking 9 points for a $600 stock. Really isn't that bad. But if I mentioned if we lose 620, next big target would be 588. So that's going to come in right here. And if you could see how the 200 days continue to kind of creeping up, so that 200 day will probably match that. So 588 would be my first real true 588, 590, even 595. If you're looking to put your toes in on the long side, your stops would have to be below the 200-day moving average, because below the 200-day, A lot of these funds will start selling stock regardless. It's basically a sell signal for the larger firms. So just keep that in mind. Big distribution days. MACDs look horrible. Stochastics horrible. I would not be looking to buy Apple here at all. I like to see it chop around a couple days and then look to see what happens. And even then, you're just looking for a short-term trade because it could easily catch this upper trend line, that long-term trend line, and fail again. So keep an eye on Apple. Looking in for a buy-in around 588, 590, 595. Dip your toes in the sand. Your stops will be below the 200. Last cues, ugly chart. Why? Obviously Apple. All right, guys, a little bit longer than usual, but I wanted to really talk about what happened on Friday. Let's be vigilant here. We do have earnings coming out. Big week this week. We'll see if the Bulls take back control. If not, we're going to have some continued selling. Of course, nothing goes straight down and or up. But just keep in mind here, don't be stubborn. If you're long and wrong, just take them off and look for another trade. Have a great day. We'll talk to you tomorrow, guys. Take care.